Welcome, ladies and gentlemen, to Commodity TV. It's time for a company presentation. Copper Mountain Mining is a mid-tier copper producer and operates the Copper Mountain Mine, which is located about 20 kilometers south of Princeton in British Columbia and 300 kilometers east of the port of Vancouver. Copper Mountain owns 75% and the Mitsubishi Materials Corporation owns the remaining 25%. The expected mine life is 17 years and they produce around 80 million pounds of copper, plus secondary byproducts like gold and silver, which stand for 20% of the revenues. Including the precious metal credits, the company has around 5 billion pounds copper equivalent in resources. They employ on-site 430 employees and produce a copper concentrate with gold and silver. In 2017, saw the company's solid operational results with a production of 88.3 million pounds of copper equivalent, made up of 75.8 million pounds of copper, 23,600 ounces of gold and 277,000 ounces of silver. Revenue for the year was $304 million with a gross profit of $59 million. The company paid back $50 million in principal and interest on the project loans and had still $45 million cash on hand at the end of the year 2017. The first quarter 2018 showed again good numbers, as did the second quarter 2018, with a production at the Copper Mountain Mine of over 23 million pounds of copper equivalent, including 20 million pounds of copper, 6,500 ounces of gold and 68,400 ounces of silver. The revenue for Q2 2018 was over $84 million with a cash flow from operations of over $40 million. The EBITDA stood at $22.6 million for Q2 2018, which was also very healthy. Also, the cost side was flat, with site cash costs of $1.40 per pound of copper produced net of precious metal credits, and total cash costs were at $1.80 per pound of copper sold of net precious metal credits and all off-site charges. For the first half 2018, Copper Mountain reported revenues of $162 million with adjusted earnings of $13.5 million, which gives 8 cents per share. Cash stood at $75 million. Copper Mountain completed the acquisition of Altona in April 2018 and wants to build the Eva mine in Queensland, Australia, to diversify the company risk on 2 producing assets, then in 2 countries and continents. Altona's Eva mine project has favorable economic numbers comparable with the Copper Mountain mine in Canada. Altona brought also into the merger 30 million Australian dollars in cash with a mine life around 14 years. The annual production shall be around 85 million pounds copper and 17,000 ounces gold then. The capex will be around 300 million Australian dollars and really manageable for Copper Mountain. Copper Mountain has a fantastic near, mid and long-term production growth potential. With the Eva mine construction and the proposed production start in 2020, will the company double their existing production numbers. In addition, they can optimize the Copper Mountain mine plan and get additional production from the new Ingerbelle property, as Ingerbelle showed outstanding drill results like a hole 18IG06 returning 105 meters of over 1.03% copper equivalent, or hole 18IG03 returning 63 meters of 0.91% copper equivalent. Fantastic results. The exploration potential is huge, and the drilling at New Ingerbelle runs well as shown. The Copper Mountain Mine has a land package of 7,284 hectares and 397,000 hectares of mineral rights in Australia. Copper Mountain has attractive valuations with a low price to NAV and enterprise value to EBITDA ratios versus the peers and has strong growth potential. The company is highly leveraged to the copper price with a benefit of weaker Canadian dollar, as they have no hedging or streaming in place. Check it out and thanks for watching us. Bye bye from Switzerland.